Good morning. Welcome to Stock Market Today. It's Tuesday, November 5th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where you can get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities moved higher again yesterday, closing at another all-time high for the SPY and the Qs after capping a fourth straight week of gains on Friday. Treasuries came under pressure with the curve steepening. The dollar was firmer versus the yen and the euro. Gold ended slightly lower. WTI crude was up 60 basis points, though off the best levels of the day following a big pop on Friday when it rallied over 3.5%. As we get to the desk this morning, futures are pointing to a higher open after the close at new highs yesterday. U.S.-China trade deal optimism remains the key driver in the near term. Asian markets were higher overnight, with Japan leading the charge. European markets are mostly higher as well. Treasuries are weaker across the curve again. Dollar is stronger on the yen, but flat against the euro. Gold is down 30 basis points. And WTI crude is up 80 basis points to get things going on a Tuesday morning. So for the S&P 500, stocks continue to advance. Another all-time high. S&P 500 closes at 3078 yesterday. Key support still in the area of the 200-day moving average, which is rising. We moved that level up to about 2890, and then below that, the August lows near 2820. Now, those are the key levels. Right. In the short term, there's some support in the 2950 to 3000 area that's been carved out over the course of the past few months with some gaps higher and some consolidation. So we'll call this zone here between 2950 and 3000 our near-term support zone. The RSI remains in bullish ranges, but approaching overbought levels here at over 68. Chaikin money flow is bullish after that interim dip into bearish territory. So indicators are in line with what we are seeing in price, still continuing to move higher from the breakout level. We have our key support levels in place. We have our near-term support levels in place. Really, it's just kind of a matter of sticking to the course and continuing to focus on leading stocks and leading industry groups, with the kind of caveat being that there is rotation playing out in the marketplace. We'll take a look at that a little bit later in the show. So what's the market in a minute? What are we writing about in the note today? Another record close for the SPYs and the Qs, and the Dow joined the party. The Dow Jones Industrial Average moved to a new all-time high as well. Remember, that group had been weighed down by Boeing, as it is a price-weighted index, but they moved to new highs. While that's playing out, the cyclical sectors continue to see improving relative strength, while the bond proxies and really the defensive areas of the market come under pressure as rates move higher. And the industrials break to new highs with the market. That's the industrials sector. We'll take a look at that a little later in the show. And as I said, futures do point to a higher open here today. Taking a look at the power bars now for the major indices. The Dow, after adding 44 basis points and moving to a new high, still skewed in favor of the bears from a power bar perspective. 7 bearish stocks for 3 bullish stocks. S&P 500 up 40 basis points on the day, 118 to 80 bulls to bears. NASDAQ and outperformers. Tech stocks continue to do well. 30 bulls, 17 bears there. Small cap slight outperformer. 688 to 302 bulls to bears. We highlighted yesterday that small caps were breaking out of a consolidation. Now for the bonds downticked on the day. Down 1.3% in price, sending yields higher. We've been talking about bonds building a base, 10-year building a base in that 1.5 to 1.8 level. Energy, another strong day. Energy stocks are starting to come on here. Fundamentals still not great. 13 bears to 1 bull, but up 3.26% yesterday. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. The major markets are mixed. Our stock of the day now, Micron, semiconductor stock. We've been bullish semiconductors. We've laid out the case for why numerous times here. And Micron is a high-profile name in that group. Has a very bullish rating due to attractive financial metrics, very positive expert activity, and strong earnings performance. Does have some weak technicals of late as it chops around, but the 20 factors, 5 in each of these 4 categories, give us our very bullish rating. Strong trend above the rising long-term trend line, and a strong industry group. So type of name we want to consider owning, right? Very bullish stock, outperforming the market. Money flow turning bullish once again. above the trend. My only real concern with Micron here in the near term is that it's overbought. Our overbought, oversold indicator holding in overbought conditions. So from a tactical standpoint, it probably sets up higher probability entry points if we wait, especially if the stock continues to consolidate here below the 50 level. I'd love to see sideways action around $50 that works off this overbought condition and sets up a better entry point. But we've been bullish on the semis. We continue to look for the leading names within that group. Micron continues to fit the bill. We just want to get it at the right time. We want to wait for that oversold condition. Take a look at Micron as a bullish watch list candidate here today. Our sector tracker really highlights the cyclical rotation that we've been talking about over the last 5 days. Look at energy at the top of the list, right? Not often that we've been able to push energy to the top of the list, but lately it's been strong, up close to 3.5% over the past 5 days. There's your industrials. We'll touch on them later. Financials continuing to perform well as rates move higher. Materials, healthcare, tech, middle of the road, comm services, and discretionary also higher over the past 5 days. And the bottom of the list, it's your defensive names, right? We talk about this defensive to cyclical rotation. You're seeing it here. Utilities, staples, and REITs all lower over the past 5 days. Towards the bottom of the list, obviously the utilities and REITs being impacted by the backup in yields. And let's take a look at the REITs as our industry in focus today. The Dow Jones REIT Services industry group has actually started to underperform the market over the past 6 months, lagging the S&P 500 by 1.3%. Still has a bullish power bar ratio at 35-10, but the group is ranked number 6 of 21 subsectors, moving down one slot over the past week. Some of the indicative names there with very bullish ratings: Sunstone Hotel, SHO, Retail Value, RVI, and Core Point Lodging, CPLG, all with very bullish ratings. So what we want to watch here is the diminishing relative strength, right? From an absolute perspective, this is still an uptrend, right? Above the rising trend line. Still has a bullish rating. From an ETF perspective, 35 bulls to 10 bears. We touched on that, but we are starting to see money rotate out of the group. Chaikin Money Flow Indicator for the fund RWR has turned bearish as it trades near the highs. And look at the diminishing relative strength. And this is the key aspect for me. As rates move higher, it's not to say that the REITs and the utilities can't continue to move higher. It's just that they're more likely to underperform. And you know the importance that we place on relative strength. I'm watching the diminishing relative strength here within the REITs sector and the REIT industry group as we're seeing this rotation play out. Now, we've highlighted it for the past couple of weeks in our relative strength work here on the show, and here's just another example of that. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers, still heavily influenced by earnings. XEC, neutral stock, up 7% following their earnings announcement. PXD, earnings sends that stock higher by 6.66%. Devon Energy actually set to report tonight, but that rally in the energy stocks pulls Devon higher by 6.6%. Noble moves higher. News of a resumption of gas exports between Israel and Egypt, sending Noble higher by nearly 6.5%. Didn't see any real news on FedEx, but FDX higher by 5.32%. On the loser side of the board, Under Armour. Under Armour hit hard, down nearly 19% after announcing an accounting probe. A couple of downgrades that I saw here this morning. Remember that this announcement comes a couple of weeks after their CEO announced that he was stepping down. NVR, Pulte, and DHI all under pressure. The builders were under pressure. Some downgrades on the group yesterday. Some cautious comments. NVR down 6.73%. Pulte still with a bullish rating, down 4.7%. And DR Horton down a little over 4% on the day. Again, one of the sell side shops came out and downgraded some of the names in the group, leading to some pressure there. And then MSI Motorola Solutions has a neutral rating, down 4% plus, as we see some follow through on the heels of the weak guidance that they gave when they reported last week. So let's take a look now at what we're writing about. Tuesdays, as you know, we focus on relative strength at the sector level, and I really love the relative rotation graph to give you a quick snapshot of how sectors are rotating currently, where they're coming from, right? Basically, we've gone through this, but just for those who aren't aware, and this is a great tool within StockCharts or any other platform that you use that gives you relative rotation capabilities. Essentially, what we're doing here is we're looking at the major sectors of the S&P 500, their ETFs, and benchmarking them to the S&P 500 to get a sense for which sectors are leading, which are weakening, which are lagging, and which are improving. And you can see those 4 quadrants here. The SPY essentially is at the crosshair here, and we see how the sectors are rotating. The closer we are to the edges, the more intense that level of rotation. So what should immediately be clear is in the leading quadrant are those cyclical areas of the market that we've been talking about, right? Also, the areas of the market that are benefiting from that growth to value shift, right? So we have industrials here in the leading quadrant. We have financials here in the leading quadrant. We have tech and healthcare in the leading quadrant. And look at the groups that are improving. Again, part of that cyclical rotation. You have materials in the improving quadrant. You have energy strongly in the improving quadrant. And look at what's in the lagging group, right? The groups that we had been talking about when we were talking about defensive areas in the market and bond proxies leading, right? Now those groups are seeing rotation. Money is flowing out of those groups, right? We talked about real estate and how the Chaikin money flow indicator had turned bearish. Look at utilities underperforming. Those are your bond proxies as rates move higher. Staples is your defensive group. I'm a little surprised to see that with a risk-on tone in the market, consumer discretionary is in the lagging quadrant, but that's what it is, right? We have to trade what is, add comm services to that group as well. So these relative rotation graphs are a great way to get a quick snapshot of how the groups are rotating and where they're coming from. You can see the tails showing you the path that they've taken to get to their current positions and how they continue to rotate relative to the S&P 500. So we said we talk about industrials. Now we said the Dow Jones Industrial Average was breaking out, but check out the industrial sector ETF, XLI. Been in a consolidation since the spring, right? Resistance up here around the $78 level, support at the 200-day moving average, which is now rising until the past week or so, where we've gotten this topside breakout from the consolidation, right? So if we want to think about, for you classical chart folks who are out there, you have resistance at $78, call support at $72, add 6 points to the upside breakout for a near-term objective on XLI of about $84. What's interesting to me is that the fund has a bullish rating within Chaikin Analytics. It has 12 bullish stocks for 8 bearish stocks. So outperformance, which is coming on of late, likely to continue. Notice that XLI on a relative basis has been in a steady downtrend, and we've now broken topside of that downtrend. And the ratio here and the power gauge ETF rating tells us that that outperformance is likely to continue. Add to that the fact that on an absolute basis, you have momentum with the trend as the RSI pushes towards overbought conditions, part of that cyclical rotation. I think it makes sense to start looking for bullish and very bullish stocks within the industrial sector for opportunities on the long side of the portfolio, should that process really begin to present itself. And then finally, let's take a look at one of the themes in the marketplace. As risk-taking increases with the market breaking to new highs, one of the more defensive themes in the market is low volatility. Invesco S&P 500 Low Vol ETF still in a steady uptrend above the rising 200-day moving average. But look at the RSI for low vol. A series of lower highs, now on the verge of breaking below that kind of 40 to 50 zone that denotes bullish momentum. And on an absolute basis, we're starting to see the group roll over and actually break this uptrend line. So thematically, we're starting to see some more risk-taking in the marketplace. That's going to wrap it up for today. Head over to ChaikinAnalytics.com/today to sign up for that email. I will be back here tomorrow.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.